Hi everyone, this is Cal. Oh my god, alert! The insiders are selling. Alright, this is no joke. You have to be very careful. Now before we start this off, disclaimer apply as usual. Thank you very much. Thank you AIMS for supporting us. Okay, now let's look at this. Now on the 29th of August, I posted this chart to everyone and I mentioned that the Dow at that time itself was 32,284. But as of today, right now, it's at 31,400. So we are actually spot on for more than 900 points. So congratulations to those who have profited from it. But most important, guys, most important is this. Okay, I mentioned that the 80% mark is critical because that was where the 2020 peak was, and then the 2020 peak become a strong support. So if the Dow Jones pulls back to below 29,563, there's a good chance that Dow may be going down all the way down to 26,878, and that is where the 2018 pattern was. Okay, so this is going to be very critical. Now, what happened on last Friday? We all know that the interest rate is going up, and then that's where the Federal Reserve says that, right, they are looking at inflation staying low so that everything goes well. They are not very concerned with the employment data. And of course, when the data came out on Friday at 315,000 jobs, people felt that, hey, this is a good one because now it has lowered down from 500 series back in July, and they felt that with the employment going down, that means that inflation will likely follow. But this is the paradox here. So you're telling me now that if the interest rate is going upwards, inflation is looking like peaking, and then employment is actually reducing significantly, that's a good sign. So it doesn't really make sense to me in my opinion. But nonetheless, itself, right, the market enjoy it, and the Nasdaq, S&P, and Dow Jones all went up. Right, this was prior to the cash market open, and of course many experts were calling for good buy, and they felt that there's going to be a follow through of buying and this could be the bottom out. But wow, what happened? The market slid for the third straight week as Nasdaq post 6-day losing streak. Look at S&P 500. Initially, at the first 1 hour, the market went up to 4,000, around 4,015, if I'm not wrong. And then what happened? The market peaked around that area for an hour. And what happened after that? The selling just kept on coming down, no stopping, all the way below 4,000 mark. And of course, there were a lot of nervousness according to some correspondent, and they said that even though there's inflation and job data are okay, but what? The market is still kind of worried. And now the S&P 500 is supposed to be trapped in a very dangerous zone. Okay, so we don't know what's going on, but more important is this. Now, this is the data from 2020 from the Washington Service by Bloomberg. Now, you can see right here itself, the insiders were selling since March 31st, 2020, all the way to the end of the year. And what happened to the stock market? You can see very clearly the market actually from 3128 on S&P 500 dropped all the way down to 2200. That's a lot of points. That's more than 100, nearly 100 points. And of course, this is pretty bad, right? So the question is this. Now we have the same thing happening again. The insiders are selling. So the question is, will that happen? Now, what we're seeing right now, the S&P 500, ever since August 16, from 4304 has went down all the way to 3924. Alright, so that means that the market may have a bit more downside to go, and I suspect that it's going to come down to cover the gap at 3787. And this is where I get pretty concerned, and because we can see now the Federal Reserve is definitely doing what they're supposed to do, they have been reducing. Now, it's not a lot, but at least they are trying. And we do see that the gradient itself is getting steeper as compared to the past. So I suspect that what Jerome Powell will do is pretty clear. He will really step on, pedal to the metal, and then increase the QT process. As we can see right now, right, there's some major outflows on bond market this year, and of course large outflow in cash, and of course we still see some funds buying into technology, but it's not as much as it used to be. So what does it tell me? That means that the market itself is now moving away from the stock market, and if they do that itself, where will they go? Likely, you know it, repo operation. And that's the reason why I felt that the market has a lot of things to explain, because you can see now that with the 10-year yields is actually resisted now at current price at 3.26, and I cannot believe that this number go past to 4%. Yes, indeed, I believe that we'll see 4% coming on. And of course, now today the US market is closed, so we have nothing much on the chart side to show you, but I'll show you the China chart. Now, this is the China A50 chart, and I don't like it at all. You can see very clearly since 2015, this is the major trend line which have been supporting the market. Now, we are very near to where is express a concern right now, If the China A50 continue to drop, right, the very main support will be 12870. This level has to stay supported, because if this support, the market may recover. But if the market should not do that, then there will be some selling, and that could bring drastic result to the market. And of course, I believe that gold might be able to see a little bit of bottoming out soon, because we have my KFC coming up on the 6th of September. Now, the last time when this happened, you can see right over here itself, the technical point shows that as long as the market cannot break this particular trend line, it will still continue to go lower. And now we still going to have another KFC point very soon, and we will let you know what will happen. If the market can stay upwards, then there will be a rally coming up pretty soon. But if the market fail, then the downside could bring gold all the way down to the 1600 series, okay? So traders, this is something to watch out for. As I said, today there's no US market. Let's look at China market Hong Kong market, take a look at what happened for today. Now you can see for today itself, for Hong Kong market, it's pretty clear. The market opens below the MLP, right, mid-level price. So once the market opens below MLP and stay below OP, usually we will sell. And of course, if the market breaks pivot 2 at 19210, the selling will continue, and we're seeing right now. So what happened is this: if the market can stay below 19210, there could be a chance and a possibility that the Hang Seng may come all the way down to 18,944. And because the KSI is expressing KSI uptick red, so usually the selling may persist, especially when you stay below pivot 2. So you can see right now the market gap down, stayed down, broke pivot 2, and now is hovering at this KTR minus 3 level. But if the market cannot stay above this KTR minus 3, the selling may bring it down to 18944. Alright guys, so this is what is the first edition of this MAO live and video. Now the next session itself will be much longer, because we have more counter to share with you. But meanwhile, it's alright. I wish you the best and stay safe. This is Cal signing off. Bye bye.